Hello Market Club members everywhere. Adam Hewison here, coming to you from the digital studios of Market Club. Well, it's good to be back. I had a wonderful vacation up in Canada. The weather was cool, which has been a big change from the rest of the country, but it was nice to get away. But coming back and looking at the markets, I can see that there's really a big potential here. What we're looking at right now is the S&P 500 index. And I want to just point this out because I think it's pretty important to look at. We've had some big swings. You can see the swings just down here, up here, down here, up here, up, all sort of going nowhere. But this is the important one. If you take all of this resistance right here, and the fact that we've just broken out right here, really indicates that this move, in my opinion, I'm just going to level this off to 1900, is really going to go higher. So if you measure from 1900 up to 2100, so these 2 points right here, it gives us 200 points. We add 200 points to 2100, and that gives us a target zone of 2300 on the upside. That's on the S&P 500. Really, that's where I think the potential is for this market to go. And maybe it's all going to lead up to the election here in the United States. I don't know for sure, but it looks technically, the stock market looks very, very good. We may see some pullbacks, but that's to be expected. But generally speaking, the major trend, if I take everything off the screen and put our trade triangles on, you can see all of our trade triangles are in a very strong position. So we have a strong position with the trade triangles, a strong position technically. I think we're going to see this market go higher. Much the same picture with the Dow. You can see we have a clear highs on the Dow. It's taken out all of this resistance we've had, which was really amazing resistance, but there's the breakout. And you can see if we just measure down to, I'm just going to be very conservative, go down to 16,100 to 18,100. I think we're going to see 20,000 on the Dow. So 16.1 to 18.1 is 200. Just add 200 to 18,100 and it gives you 20,000. That's what we're looking for on the Dow this year. So let's see how things work out on that. What's interesting on the NASDAQ is that it hasn't cleared these highs really very well. It's kind of right up there in the last vestiges of resistance. So it's going to be a little slower, but nonetheless, if you look at our trade triangles, they're all positive, indicating the trend is up. So I would say probably once we clear this level, I think it will, because of what's going to happen to the S&P 500 and the Dow, we'll see this market begin to accelerate. But right now, it's really at that resistance level, which I think could give it some problems around the 5,200 level. So let's see how that plays out. We're looking at spot gold, and spot gold, in my opinion, can go much, much higher. Here's what we're looking at. Here's the first breakout, the first level that we saw really a big change in the market. That's at $1,300 an ounce. And you can see this sort of gives us this sort of head and shoulders base. Now, this is capable, in my mind, of taking the market from, let's say, we'll talk 1,050, just for 1,050, up to 1,300. So it's 250 points higher than we were here. So we're looking at somewhere in the 1,500 to 1,550 area for the next target zone for this. So it's quite a bit higher than we are right now. Also, if we stretch this out even further and we put in a Fibonacci retracement level, you can see the 1,500 to 1,550 level. The midpoint is right around 1525. 1523 is a Fibonacci retracement on this. So watch that very carefully. I think this gold is going to go higher. So it's going to push gold stocks higher as well. And gold stocks we've been looking at have been, of course, Barrick Gold and also Newmont Mining. So check out those two stocks, Barrick Gold and Newmont Mining. I'll show you one thing quickly on Newmont Mining. Friday, new highs, and recent highs anyway. Looks like it wants to go higher, in our opinion. So watch that carefully, along with Barrick Gold, which is also doing very, very well. Now let's take a look at crude oil. We're looking at the September contract, and as you can see, extended pullback from the highs around just over $52 a barrel down to $41.08. Now, if we put our Fibonacci tool on, so let's take a look at our trade triangles. As we put them on, you can see that our daily and weekly are negative, indicating the intermediate term trend is down. The longer term is still positive. So what we're looking for right now is some sort of turnaround and support to build at the retracement level, the Fibonacci retracement level, and then reverse and go back up. Very oversold. You can see that on our indicator, the RSI indicator. Something to watch in the coming days and weeks ahead. Hey, I'm Adam Houston. It's good to be back. Thank you for taking the time to watch this video, and every success in your trading today.